On-site coverage of the Precious Metals Summit is brought to you by Borealis Mining.
Ronnie, welcome back.
Hi, Peter.
So we were chatting at Beaver Creek and we had a really long discussion about the different strategy that Incrementum have. So obviously you've got the aggressive, the neutral, the defensive. I recommend anyone go and watch that, really understand what you're doing in those different scenarios. We were acknowledging that we were definitely in a bull market in September. I mean, we were all pretty happy about where we were. Roll forward, we did see that pullback. And then obviously you've changed your strategy since then from aggressive to neutral, right? What was the rationale behind it? What were you seeing in the market at that point?
We haven't changed the strategy, but the model went from offensive to neutral. Let's not forget, Peter, I mean, when we met in Beaver Creek, gold was trading at 3,600. So that was beginning of September, like second week of September.
Yeah.
And then we went up to 4,400 until October 21st. So that was a huge move. And I remember in October, I got up in the morning, looked at the gold price. Okay, new all-time high, plus 3%. So that was like, we all got used to that. And we kind of intuitively knew it's not going to last forever. You know, there was lots of FOMO and there was national TV calling me up for an interview and stuff like that, like all those sentiment things.
And they were some of the things you were mentioning when the big broadcasters are reaching out. That was one of your indicators, right?
So our model, which is basically telling us when to play a little bit more defensively, when to be neutral, and when to play offense, it switched from offense to neutral. And since we've got the signal switching to green to offense, you know, mining stocks are up 160% and gold more than doubled. So there was a big move. Now, on the 10th of October, the signal switched to neutral. And it was the cyclical part of the signal that switched to neutral, not the fundamental signal. So, I mean, I can show you the rationale behind the model, but it's actually two different signals. It's a cyclical signal, which is more like momentum driven, and then as a fundamental signal, especially for the miners. So this signal is just for our allocation in the mining space. And then we've got the Incrementum gold price model, which is showing us the direction for the gold price itself. So what we did due to this change in our model, in the mining fund, we took some profits. We've got a cash allocation of 25% roughly at the moment. So we now have dry powder. We now have some sort of a beta 1 to gold. So we have the same risk like gold. If we've got an offensive signal, we've got a beta of 1.6. So it's significantly more volatile than gold itself. So I wouldn't say that, you know, we hit the brake. We just, you know, took the foot a little bit off the gas pedal, So from my point of view, it's a pullback. We haven't seen the peak, but I think it's a healthy correction. From my point of view, over the next couple of weeks, probably until the end of the year, we're probably gonna be in some sort of sideways consolidation pattern.
The changing from offensive to neutral, obviously you've done some profit taking, you've rebalanced the ratios. You're not seeing this as the end of the gold bull market by any means whatsoever.
No, not at all. I think what's most striking is, and I said that previously, you know, just because we've reached such high absolute levels, you know, a 10% correction from 4,400 down to 4,000. It's $400. I mean, that's like more of the whole gold price, in the year, what was it, 2004, something like that.
When Brown sold it all was, about 2004, 2005. Went down to, didn't it go down to like 250 at one point, didn't
250
it?
was, I think, the lowest, So that was a wild, in absolute terms, a wild move, but actually a 10% correction is just normal. It's just a healthy pullback. However, I've never seen, over the course of a 10% correction, I've never seen the sentiment going from extremely positive to extremely pessimistic. So that went pretty quickly. And this is a sign actually for me that it's just a correction, because normally if it would be the end of the bull market, you would have to see high volatility in gold prices and actually, you know, falling gold prices and still very elevated sentiment. Yeah, but we haven't seen that, and I think that's something that makes me pretty positive. And then on the other hand, gold is still up 57% year to date. That's a massive move, and I think it's like running up a hill. You have to at some point take a breather and just rest.
Yeah, I think there's two lines of thinking that I've been noticing from the research I've been doing. You've got one group of people who say, okay, the fundamentals have not changed. You've got the weaponization of the dollar. You've got debt ratios still out of control. It's no one really wants to own bonds at the moment because if you really factor in real interest rates, you're probably losing money holding bonds, etc. And then on the other hand, I mean, you were doing a speech earlier. You were talking about when you see this mania in gold, you've sort of when you see the real mania, you need to take a little bit off the table. And some people have been saying, well, we saw that mania. We saw just before the $400 pullback, we saw the queues outside gold stores where the everyday person was queuing up for hours just to buy some gold. So where I guess where do you sit on that? Is there a risk that we have seen the mania, we've seen that peak in any way, or is it that these fundamentals supporting gold underneath it are just too strong, and it will surely, similar like with we've had how many all-time highs in the last 2 years? Like 30?
more. I think Peter, the queues that we saw in front of those gold shops, I've seen a couple of pictures, but what I saw most was ABC Bullion in Sydney. And I talked to a couple of people that actually were in those lines, queuing up in front of those stores. And if you talk to people, there's actually many people selling gold.
Oh, is that right?
Yes, but also people buying gold. Yeah. So I would say at the end of the trend, you would see the majority actually buying gold at whatever it costs. Yeah. The second thing is, if you have a look at the facts, I showed a chart this morning from Bank of America. The inflows into gold were since the year 2020 was 100 billion.
Yeah.
So that's, if you want to make a comparison, 2% of the current market cap of Nvidia. Right. While I think for equities it was like 4.5 trillion or something like that. For bonds, 2.8 trillion, something like that. But what I'm seeing now, Peter, is I think we're now in a different stage of this bull market. Yeah, as I've said previously, we're in this public participation phase according to the Dow theory, and since May, when we published the last in Gold We Trust report, obviously, the trend progressed, and we're now, Jamie Dimon is coming out with $5,000 to $10,000 price target, then Goldman Sachs, I think, what is it, 5,900 price target. And I used to work as an analyst, and I know that the larger the institution, the more pro-cyclical analysts tend to be because of career risk and so on. Right. So this is a part of the process. Yeah, you're seeing more and more, really positive and high price targets. You're seeing more products are being launched. You're seeing the general sentiment is more positive. You're seeing Morgan Stanley coming out with the 60-20-20 portfolio. 60% equities, 20% bonds, 20% gold. I mean, it's not Incrementum. That's Morgan Stanley. They're still a little bit larger than we are. Yeah. So that's a sign. Then Jeff Gundlach, the new king of bonds, saying 25% gold allocation. Yeah. Then you've got this big term on Wall Street now, the debasement trade. Yeah. We've got the debasement trade since 1971, actually. It's funny that now people are talking about this debasement trade. Yeah. So I think the fundamental trend is obviously still in place. And I think that people here in the West tend to forget, from my point of view, the foundation of this bull market is basically coming from Asia, from emerging markets. This is where the majority of the physical demand is actually coming from. Yeah. The center of the gold world moved to China, to India, to Russia, to emerging markets in general. I think now, very late, there's financial investors in the Western world finally waking up. And they want to, join the gold party. It's late, but this is happening now. but then still, when I'm talking to institutional clients, and they say, well, we think about reducing our allocation to gold because it did so well. We're going down from 3% to 2%, and I say, okay, 2%. It's not a portfolio hedge, yeah. That's pocket change.
That's
It doesn't make any difference. So
Yeah.
I would say that again, pullback, yeah. Gold has largely been overbought, but it's still under owned in the Western world. So the fundamental drivers are still in place.
That fundamental driver underpinning gold over the last 3-4 years obviously was when there was weaponization of the dollar. They took away the 300 odd billion of Russian assets, right? And then the central banks around the world turned around and said, okay, well, maybe we shouldn't be so much tied to the US dollar anymore. We should start divesting and putting it into gold. Have you had any indication whatsoever of how long the central bank, at what point are the central banks content with the amount of gold that they have and they're not the sort of underlying force driving the market? Have you had any research into that whatsoever? What percentage of their reserve being gold do you think are they going to be happy with? Or is this a continuous theme now that they will be continuously buying gold?
It's a good question. I mean, I think if you compare the percentage of gold as a part of central bank reserves, Western world versus emerging markets, emerging markets are still highly dependent on the dollar, on US treasuries, so they want to diversify into gold. There's some examples recently, like Poland. Poland just said they want to have 30% of their reserves in.
I found that really interesting because they actually put a number on it, and that's what I've been trying to look for is countries actually putting numbers on these things. Yeah.
Then you've got China. China is like 2.73% officially, obviously. So I think this trend with roughly 1,000 tons of gold being bought by central banks, which is almost a third of annual gold production. Yeah, so it's significant. I think this will continue because the majority of emerging markets are still underweight, and central banks are very bureaucratic institutions. So once they have a process in place, it usually continues. So that's definitely it's going to continue to be a driver. And then you've got some wild cards like the United States, for example. Yeah, I mean, if you read the paper by Stephen Miran, if you listen to Scott Bessent, two very, very influential guys in the administration, they understand gold and they understand the flaws of our monetary system. They understand the advantages, but also the disadvantages. Yeah, Triffin dilemma of having the world reserve currency. So I showed one chart this morning with the shadow gold price, which is basically how much of the monetary the M0 monetary aggregate is actually backed by physical gold, and it was more than 100% backed in the 1940s. It was more than 100% backed in the 1980s, beginning of the 1980s. And so there's kind of a 40-year pattern there, give or take. So can we go to a kind of a full backing of the monetary base again? I wouldn't rule it out, actually. Yeah, that would bring us to 21,000. So that's not my official price target. But if you study history, if you study monetary history, I would say from a monetary point of view, gold is still cheap. If you compare it to things that we consume, like oil or other commodities, gold is expensive. But in monetary terms, I think gold is still, at reasonable prices.
Hi, I'm Kelly Malcolm, founder and CEO of Borealis Mining. We're reigniting gold production in Nevada, one of the world's most attractive mining jurisdictions. Our flagship Borealis project is 100% owned and fully equipped for production today, with power, water, workforce, permits, and even a modern ADR facility already in place. We've started crushing high-grade stockpiles, and our first gold pour is just around the corner. Historically, Borealis produced over 600,000 ounces of gold, yet much of our 21 square mile land package remains unexplored, with nearly 2 million ounces of historical resources and past drill results up to 67 meters at 16 grams per ton. The upside here is tremendous. But Borealis is just the beginning. through acquisitions like our nearby Sandman project, with a strong PEA showing 35,000 to 40,000 ounces per annum and $121 million NPV at $1,800 gold, we're building a hub and spoke model designed to deliver scale and efficiency. Our vision is bold, to grow into a greater than 100,000 ounce per year Nevada powerhouse within the next 5 years. With a proven team, strong shareholder support, including mining legends Rob McEwen and Eric Sprott as major backers, and multiple catalysts ahead, we're positioned for both near-term cash flow and long-term growth. Follow our journey at borealismining.com or connect with us at info@borealismining.com.
Just on the, because the thing that you were talking about there, the paper that was written, I think back in, it was like November
yeah.
24,
Yeah.
23, was it?
2024.
2024, because I remember reading it just before PDAC, because Adrian Day mentioned it to me before then. And I think another name for it was the Mar-a-Lago course.
Yes.
Yeah. I can't actually remember all the detail. I remember parts of it, but just in terms of the relation of gold within that paper, would you be able to just lay out sort of how the Trump administration, if they are following that plan, how gold fits into it?
So, I mean, Scott Besson he said that the revaluation of gold is on the table because they still have it at 42 on their books.
They do, yeah.
So if they revalue to current prices, that would give like a windfall profit, like just for accounting terms of more than a trillion now, which is money, obviously, yeah. But it doesn't really change the fundamental problems that the US has. So I thought it was interesting that he's mentioning it, that then Miron is actually writing in that paper that, the US could actually, lever this fund, this kind of state fund. So you've got 1 trillion coming from gold, and then you can take like 10, 50, 15, 20 times leverage on that, yeah. Okay, that really moves the needle. You can do some stuff with that, like infrastructure programs, yeah, or just, I mean, the US now directly invests into commodity companies, yeah, like MP Materials, yeah. We've seen it with Trilogy. We've seen it in Argentina. I mean, the US is buying the Argentina peso.
I read a Bloomberg article, I think it was only a couple of days ago, where traders are now making bets on what they think Trump is going to invest in next. What's investable in Trump's eyes, we're going to invest in that.
And I've had a great meeting before with a company that has 2 projects in the US, in Oregon and in Nevada. And she told me, it's such a huge change for the better in terms of permitting. So I think, next year we've got Judy Shelton with her proposal regarding this gold-backed bonds that she's very vocal about. So basically, century bonds, 100-year bonds with some sort of a gold backing, and we talked to Judy a while ago, and I think it's a very, very interesting proposal. And I wouldn't rule out that the US is coming out with creative ways, to deal with the debt situation. Yeah, I mean everybody's aware of that. It's not just the two of us. So another example would be the Genius Act. Stable coins. Which are now really an important buyer of US Treasuries.
Well, look at Tether buying up all the royalty, the small scale royalty assets, and buying up gold. It's happening.
So, and isn't it ironic? I had a long conversation with the guys at Tether in Beaver Creek.
Oh yeah.
And they're getting all the coupons from owning US Treasuries. And what do they buy? They're buying Bitcoin, physical gold, and farmland. So, and now royalty stocks. So it's really interesting. So, long story short, I think if you read this paper by Stephen Miron, you can tell that the really influential guys in the administration, they know what's going on. They've got a plan, and they're really working off that plan. And they will put countries into 3 different boxes, friend, something in between, and enemy, And this is what's happening, and we've seen it with Argentina.
Tariff thing,
exactly.
Yeah, and I remember when reading it, a lot of it was to do with interest rates and tariffs and finding that balance right. And so, I remember reading, I think it was earlier in the year, that the head of the Fed was potentially going to be leaving in January. Is that still the case?
No, I think, isn't it spring, like March?
Is it spring?
March or April? Yeah.
But you would assume as soon as he's gone, he's going to appoint someone who's going to be maybe a bit more pro-Trump. Maybe you'd assume. We're going to see. I'd imagine we're going to see much lower interest rates next year, right? That's the assumption.
Yeah.
If we go back to this inverse relationship between interest rates and gold, obviously we haven't really seen that during COVID. Gold was still going up and whatnot, and interest rates are going up. But surely that's another support mechanism for gold moving into next year, wouldn't you think?
Yeah, I mean, I just don't know how it's gonna end up, because I think Donald Trump, he understands what the median voter actually wants, and I think he was focusing on just two things: immigration and inflation. And I think when it comes to inflation, many of the indicators that I'm following are telling me, well, actually there will be a comeback of inflation. Yeah, and actually, in the Eurozone, but also in the US, we're still way above the central bank targets. Yeah, so they actually wouldn't actually have the mandate to lower rates because of inflation still being elevated. Yeah, and now if inflation makes a comeback, yeah, and a kind of a U-turn.
I guess the counter to that, though, is obviously what's the deficit per annum? 3 trillion, around that in the US. It's a pretty large number. If they want to do more short-term borrowing, they're going to want lower rates, right?
Yeah.
So I think that's the problem Trump's got, is that
of course.
it's costing him a hell of a lot of money to run the country at the moment,
of course,
and pay back the debt. So,
and we've seen, with Elon Musk, who at the beginning said, I'm gonna really cut costs, like Milei in Argentina, 3 trillion. And then at some point he said, okay, it's not gonna work. Yeah, and I'm
Well, I listened to him recently. He was on Joe Rogan. I don't know if you heard it. He was on Joe Rogan again last week.
No.
And he was talking about, it was really good. Yeah, he was talking about Doge, and obviously I think the problem he had is he just didn't really have enough of power or mandate to actually, because if it was up to him, Department of Education would be gone, all of these different departments would just be gone, similar to Malay, right?
Yeah.
It's, but yeah, he just, obviously when you're just playing around with certain departments and certain areas like social security, etc., that you can't really find those. So anyway, that was sort of where he was going. Okay, so this time next year, where do you think we're going to be? Tough question, I know.
With gold.
With gold and just the general state of the market, I guess. Yeah.
I would say, we shouldn't forget we've got midterm elections coming up. So I think Trump wants and needs market to be higher, even higher. And now we've got this, somebody coined the term K-shaped economy, where, actually, if you're invested in like all those hyperscalers and those tech stocks, you're doing tremendously well. Yeah. And this is like what the general stock market is all about now. And then you've got the other side of the K, which is like most of the consumers that are actually suffering. But I still think that Donald Trump wants to keep the markets up. It was interesting that Scott Bessent recently said, because previously he said he wants to be focusing on Main Street. And now recently said, no, I will be focusing on Main Street and Wall Street. Yeah. So he slightly changed that. So, what we saw this morning coming out, those stimulus checks from Trump with like 2,000 per American, basically coming from the tariffs. I mean, that's like...
he's also talking about cutting Obamacare now and giving the money back to people as well.
That's helicopter money.
Yeah.
What's going to be the impact? It's not going to be deflationary. Yeah? It's going to be inflationary.
Of course. Yeah.
So I just don't know how he's going to deal with higher inflation numbers. Who is he going to blame?
But this is the big thing, though, isn't it? It's like like I was saying earlier, he needs the lower interest rates, in my opinion.
Yes.
But he's doing things that potentially are going to cause inflationary pressures. So,
it doesn't add up. It doesn't add up. And he actually needs a significantly weaker US dollar. And I think that's really one of my main reasons why I'm still extremely bullish on gold. I think, we will be entering a dollar bear market. We haven't seen anything yet. Dixie index is still trading around 100. So this is not a bear market for the dollar yet, but I think Donald Trump needs and he wants a significantly weaker US dollar, and he's very vocal about that.
Well, that was part of the report as well,
Exactly.
right? That was all part of the report.
So that's like, in Vienna, we say if you can't have both. It's like having warm, how do you say, ice lollies? Ice pops.
Yeah.
You cannot have a warm ice pop. It's like squaring the circle, defending the US dollar as the world reserve currency, but then on the other hand significantly weaken the US dollar.
Yeah.
Something's got to give. Yeah.
Do you think it can maintain it? I mean, it's already losing its grip on reserve and currency. Even if you're just looking on a quarterly basis, on an annual basis, it seems to their market share in terms of amount of countries holding US dollars, it seems to be shrinking and shrinking. Obviously, gold price going up obviously changes the balance as well, right? But it seems like he's not that bothered about the US being the reserve currency anymore. Would that be fair to say?
No, I think he is.
You think he is?
Yeah. No. I think.
But how can he again, like you were saying, have a weaker dollar and
sticks and carrots?
Yeah.
Find, and that's also part of the paper. Many ways to actually, first of all, offer protection, and incentives to other countries, and then they're basically in your team, And then on the other hand, if you're in a different team, do whatever you want, You won't be buying U.S. Treasuries anymore, but obviously he has to find like a new set of buyers for U.S. Treasuries, and Genius Act, but then also gold-backed bonds, for example, and then means of financial repression, just funneling money where it normally wouldn't go to, like for institutional players, like that they have to buy a certain amount of treasuries, whatever stuff like that. I think is going to happen, and I think before the de-dollarization, there's the de-euroization happening, and we're seeing that already.
Yeah.
Gold is now the second largest reserve currency, So I think we're living in a relative world, and there's many problems that the dollar has actually, but I think there's many other currencies that have much bigger problems.
Yeah, well, I remember during COVID, the dollar was known as the least dirty shirt, wasn't it? And it's can it still hold on to that? Because, like you said, the pound doesn't look great at the moment.
I'd prefer the Swiss franc. Yeah.
Well, I bet you do.
Yeah. Obviously.
Yeah. Just on the other side, obviously, you're talking about the West, and in particular America. They're creating their alliances. They're going to be doing favorable terms for their friends, neutral countries not too worried about, and then the enemies, so to speak. Obviously, they're going. It sounds like the BRIC nations, which are now essentially turning into what Trump would probably see the enemy, for the most part. They are. I guess they're going to want to do something to combat this, though, aren't they? What in terms of retaliatory action? One thing that gets thrown around is BRIC gold currency, something along that. Do you see, maybe not that far extreme, but do you see some form of retaliatory action in this financial war that we're seeing?
No, I think if you read the papers, like the summaries after the BRIC summits, it's not like there's so many different things that they're discussing and negotiating, and they're not really deciding too much, because it's a big set of very different countries, and it's not easy to set up a clearing system,
Well, it's similar to the EU. It's when you've got so many member countries, it's hard to all of them to agree on anything. If you've got veto status, then nothing gets agreed upon, right?
Yeah. And then there are some countries leaving the club. No, but I think I don't think that they will come out with the gold-backed BRICS currency, but I know that gold plays a major role. And I think what really kickstarted the move in late September was those pictures coming from the meeting of the Shanghai Cooperation Organization, where you had like Putin, Xi Jinping, but also Modi.
This was just before the military parade,
exactly,
wasn't it? The day or two before,
The next day there was like a big energy deal being announced, and then there was the military parade. And I think that, those are three very important nations when it comes to gold consumption, but also gold production for China and for Russia especially. So, and now we're seeing, this taco Trump always chickens out. We're seeing that because, the Chinese have the rare earth. They've got the critical minerals, and I think that
they do have that. And I've got another thing on that. Is that where they have held so much US securities, that I think they have been putting pressure on that market. They have been selling into it, creating weakness as well, right? But yeah, sorry, on your point about the rare earths.
So if you compare like after the big summit between the US and China most recently, if you compare the communication by Donald Trump, I think he said on a scale from 1 to 10, it was a 12. It was a huge success. Yeah? And if you have a look at the official announcement by China, it was like,
Yeah, that's
very, I would say, okay, it was good chat, and we continued to discuss, and so.
But Trump has a habit of that. I mean,
of course.
Look at the Putin meeting in Alaska where he says, we're meeting up again, we're going to do this, we're going to do nothing. It's,
So I would say China is actually, they're playing it really well. They're really playing it well. And I think that, I don't think it's only about gold, but I think that gold plays a major role in that. And there's no coincidence that starting in 2022, central banks all around the world started buying huge amounts of physical gold. We all know that China owns and buys more gold than officially announced. That's no secret.
Yeah.
So I think that, in those transition periods from one monetary system, from one leading currency to another, gold always played a major role. And you're perhaps familiar with Fofo, a friend of another, this legendary blogger. And we once had an interview with him for the In Gold We Trust, and he said, you only need one revaluation of gold in your lifetime. Yeah, and perhaps we're like in the middle of that. Yeah. And if you study monetary history, I mean, it's about time.
Yeah, no, great. Ronnie, thank you for your time.
Thank you, Peter. It was a pleasure.
Thank
Thanks.
you.